Hello, coconuts. How are you guys? We are back for one more week of TFC updates. What's up? I hope you guys have had a good weekend. I was tuning in on Tuesdays at 8 p.m. So we thank you very much for listening in. Today, we're going to be talking about a number of things, honestly. We have Spotify, who did a share buyback. We're going to be talking about Twitter. We're going to be talking about Google and Nvidia as well. And of course, we're going to kick off with things with Visa, right? So today, with just kicking off, Visa actually purchased, or this past week, purchased a CryptoPunk, I believe, which is actually known as an NFT. They purchased it for $150,000, which in effect is going into to be sort of part of the crypto and being part of the crypto space, right? So I think it's interesting to find out why they did this. Now, $150,000 for us is quite a large number, right? Some of our annual incomes, or maybe even 2-year incomes. For Visa, I would dare say it's I don't even think they noticed it, to be honest. But I love to find out here with Reggie, of course, with Thomas as well. What do you guys think, right? Why did they go into NFTs?
Maybe some intern bought it, right? It's so small, nobody cares. Like, hey, let me just spend some money here and let's buy a CryptoPunk. But it's I think Thomas has some thoughts about this. We talk extensively on our discussion with PayPal and Square and what have you about the payment system, how it's going to change. But I just want to put it out there that it's very interesting that the company is buying an asset and not like a company. I would think that if they really want to go ahead on this, then it is they have to acquire some sort of infrastructure, right? Because it's a whole different infrastructure that has to be built, and there are a lot of people already building some of these earlier stuff. Mintable and some of the other guys are already building NFT ecosystems and all. So I was yeah, when you told me that you want to talk about this, I was like, really? We're gonna talk about this? Is this company? Did they just buy a company, or are they just like buying it for the hype and all, right? And it looks to me that it's a little bit of a riding a hype kind of thing. Yeah, it's more marketing effort than anything else. At least in my current view, I don't see any serious kind of play into the whole NFT space by Visa. Yeah.
Got it.
I think they got some spare 150K stash,
yeah.
right, in the financial budget. And they said,
Well,
where do we spend this, right? Like, okay,
they probably
buy,
do,
like,
in all
TP
fairness.
or something, CryptoPunk.
Yeah. And I think just for our viewers and of course listeners out there, NFT, right? Just to break it down a little, stands for non-fungible token. In which case it's actually a digital asset. I mean, it's of course on the blockchain technology, right? So just to let everyone know, for those that don't. So you, Reggie or Thomas, maybe, right? You think this is just FOMO?
No. I think more seriously, I think they're just trying to also create more transactions. But they're the first one to go start. Any platform requires some kind of kickstart. If you look up, like, say, Reddit, there's actually a lot of bot accounts when they just started, and they openly said it. So for a platform that just like trading transactions, in this case NFTs, they want to be the first, if not one of the many transactions that they'll make. It's just that the first one is just something that's newsy. Yeah. But if you think deeper, right, for a CryptoPunk or asset that trades at 150K, and like one Berkshire stock is like what, 230K? So they've already set the price of a CryptoPunk at 150K, and everyone else would rather like follow. If not, maybe just adjust the prices here and there, but it's going to roughly trade around that price. Yeah, so they're also setting where the valuations should roughly start. I'm not sure how the market makers on these NFT platforms are going to work, or if there's none at all, then that's even crazier.
How can there be none? How can there be none?
It's quite interesting. So I think it's something that's worth exploring. Yeah, whoever is actually setting these prices and marking them to anything else.
Yeah, I think other than riding the wave, because 150,000 is very cheap for a marketing campaign. Just saying, if Visa buys it and then they go around and people kind of, oh, Visa, not that old school anymore, right? We're gonna go edgy and go new. Eventually, I definitely think that because they are a company that is built on transaction systems, they will have to go into this space, because this is the next frontier of transaction, the digital transactions, where it is not going through the fiat system, right, which is where they operate in, but actually fully in the digital system. where money does not even need to move out into the whole Swift ecosystem. For everyone that's listening, probably you know by now, right? So that's how Visa operates in their business, and they're going into this space. So I think that's a pretty interesting kind of outlook to see where this goes with Visa, right? So I do declare that I am long Visa. I'm owner of Visa, and for a very long time, yeah. Oh, you also long Visa? Okay,
Yeah.
You
cool.
also.
So yes. So I think for a very long time, they have been dominant in the space, but they definitely have been disrupted. Okay, I won't say disrupted, but they've been seriously challenged by the guys at PayPal, the guys at Square, even a lot of your kind of close ecosystem kind of guys like Alipay. They are taking up more and more share of the future of transactions, and I think Visa wants to stay relevant and potentially enter this space, right? So this is a interesting first endeavor into this space. But I do think that NFTs in itself has real value. Like it has not real okay, can I clarify? This very touchy topic, right? not real value, that it's not overpriced or like there's a fair price to it. No, but it's more like there is a real problem here, right? A real problem to be solved, that fungibility is an issue in the digital space, which is why all these blockchain, all these, they exist, right? Because you cannot tell one data from the other. So when someone created this whole ecosystem of NFT tokens that can represent, essentially the tokenization of a thing, right? That cannot be that is not fungible in real life. I think it really solves that problem of accurate representation in the digital world, right? So in that sense, it has a real function. It has a value to it. I think eventually, just as of now, as an investor, yeah, you can say that I'm the kind of investor that is not very active in trying to go into new frontiers, lah, right? So I'm the kind that is a little bit more slow to things. I'm always exploring new stuff, yes, but I'm not putting myself out there at this point in time with NFTs, yes. But proud Visa owner and very happy that they are exploring. They have more money to play around, So yeah, good.
Yeah. So according to Visa has a head of crypto, right? You're saying it's just like a test kind of trade. So they're just trying to expose themselves little bit by little bit. So they bought it through Ethereum for a price of 150K, but the price of the CryptoPunk is now 199K. They made 30% already. Yeah. So
I don't know how to
Not
feel about
bad.
that, man. I don't know how to feel
That's
about
pretty
that.
good investment.
They help me
pretty
make
good
not
money.
an advice to go and buy Visa or your crypto lah, but I think Visa knows what they are doing.
Or even if they don't, it's 150K for them, right? It's quite a small amount.
Yeah. And then next month you see them putting 10 times the size, and then
Yep. Absolutely.
Cool.
Yeah. So I think any last words before I move on to the next bit?
No, let's go.
The next part of juicy news. All right.
Yeah, let me take
Reg,
juicy news too. So I think a lot of people may or may not be on this platform anymore. I don't know if how many of you guys are on Twitter. Right? Are you guys on Twitter? Do you guys have a Twitter account? Wait, you guys
have an
Twitter
account? I'm not on it. I have an account.
Stalking
I'm not
on Twitter.
Okay. So you're just stalking all these influencers and all these other people on Twitter, right? Just kind of see what they're saying. And if you don't yet know, Twitter has been releasing a lot of new features recently. And one of the new features that they have released is a newsletter subscription button, right? So I think that is extremely important because if you don't know, I think a lot of people, when they go on Twitter, they are building the following, building that kind of reach, eventually to shift to Substack or shift to MailChimp or shift to some sort of a newsletter ecosystem that they can then monetize and kind of move from there. That is so far the observation. And so I'm pretty happy that Twitter is exploring something like that to move into a different way of monetization, because Twitter has been struggling with monetization for many, many years. They have essentially lost out on the advertising space, right? Because Facebook and Google are just too efficient with their CPM and their conversion rates and all of that. It's just very hard for paid advertisers to explore Twitter in a serious manner. So Twitter has potentially raised the white flag on advertisement dollars and try to go into supporting creatives and supporting newsletter writers and what have you. Yeah, what are your thoughts on this new? I would say it's a glimpse of a pivot, right, to explore a different monetization model. What are your thoughts, guys?
Yeah, I mean, I think it's a great idea, right? Twitter, we all know is very good for its first impression or its first point of contact in terms of marketing, right? Like for example, when I use Twitter back in the day, I go if I find them on my feed or if I find them commenting on someone else, I go to their Twitter feed. But I will move to their Facebook or I'll move to their Instagram to find out more about them. I won't really know anything else. I won't really read all the tweets if you scroll down. And in this manner, right, to get a newsletter, you need to be going onto their website right now, or you need to effectively know about them in order to get access to that newsletter. If you find their news interesting, Twitter is a great way for you, just as a very quick snapshot as you reach out to them or as you find them, and just click newsletter. So I think it's a very good play. I think it's a good, well, you called it a pivot. I think it is definitely will be a pivot, and probably something that they can recognize in terms of revenue. Thomas, what do you think?
I don't think it's a pivot. It's more like enhancement to their existing offering. Why I say that? Because most of these people who are actually writing newsletters, they use Twitter as a complement. They write a condensed version of what they posted in these things called like tweet storms. I don't know whether you've heard of this. So it's like /1, /2, /3, and you just go all the way down to like 25, maybe even 200, right? Like they just want to express something, but you can't fit 140 characters. So they do 140 characters times 500 or something, and then it's a whole essay there. So you just search for the kind of tweet that makes most sense to you. You actually read that, but you find that, okay, as you scroll down, there's some logical cohesion to all the tweets, right? And then you find out, okay, actually it's the whole newsletter inside. Yeah, so people actually prefer to digest the newsletters in the form of 140 character tweets as compared to reading their entire. Yeah. It's a summarized version, right? So you don't actually have to go into the newsletter, go through your email, read it in that form. It's a different kind of format from that. Yeah. It's like a TLDR kind of thing.
I honestly wasn't really a big fan of those /2, /3. After I think the second one, I just stopped. So
I'm not sure if user experience is the best, but I do agree with you that essentially this is what is already happening on Twitter. It's not like a big pivot, but I would say that building all these features in and potentially exploring monetization is a pivot, for the company. And for a very long time, they have still been trying to get advertisers and all. And Twitter does not have a small reach. They have a MAU about 300 million people, right? 330 million people to be exact, right? So they do have a lot of people on their platform. Of course, it gets dwarfed when you look at the other guys, right? Whether it's a TikTok, whether it's a Facebook, Instagram, whatever you. But yeah, Twitter is not a small social media platform. And for them to kind of do this pivot, I think, it's high time. Dude, it's been so long. You look at Pinterest, look at Snap, look at everybody. They're all trying to find a different way to make money. And, Jack Dorsey needs to focus, or he needs to quit one of his company. And shout out to Dorsey.
Hey, Elon Musk can run 3 companies, so why not Dorsey? No comment.
Don't get me started.
Elon Musk also doesn't really sleep, lah.
Yeah. But don't get me started about Musk. Anyway, yes.
I like the robot dancing, if that helps.
I think Twitter is going to ride a lot on the blogging trend then. So I'm not sure where this will lead them the long term, because they are like the go-to platform if people like to digest tweets, right? That's how I interpret Twitter.
Yes.
But now if they're doing more of the subscriptions kind of thing, to subscribe to a newsletter, is a newsletter going to be inside Twitter itself to compete against Substack, or is it going to redirect to the Twitter user's own blog, which could be a Substack? Right, so this is
I think that's the whole idea, because you're seeing a lot of paid content, you're seeing a lot of Substacks coming here, you're seeing a lot of MailChimps, Indie Hackers, whatever you right. So you're seeing a lot of these other software platforms that are all built for newsletters that are gaining a lot of traction, and they have a lot of inbuilt paid features, right? So I do think that is the part that Twitter is trying to hack. They're trying to shift everything onto Twitter, and so that you don't need to divert your audience out, of Twitter away into a Substack or into a website, right? So you could just build everything, on Twitter itself, right? Which is essential. I mean, there are so many successful examples, right? Like Seeking Alpha is one of them, right? I'm not sure if you guys use Seeking Alpha, but for all you people that are investing, okay, well, not sponsored. I don't know if I should name drop, but anyway, so Seeking Alpha is one of them, right? There are all these people that write research papers, and they just put on Seeking Alpha, and they grow a following there, and they can monetize off the users that are on the platform, right? So Twitter can potentially move towards something like that, where essentially they are building micro writers, where writers don't need to build their own presence elsewhere. They could just kind of build on Twitter itself, and maybe that is something. But okay, I just want to put it out there that Twitter has not come out to say that they're officially switching their business model. But I do think that this is a glimpse of what potentially can happen with Twitter, because let's be real, 330 million relatively sticky users. They haven't had like user dip. So it's relatively sticky. Yeah, it is a big market to be explored.
Nice. I think as another thing, it's really that re-engagement loop, right? I think just as a quick summary there, Twitter,
Digital
like I
marketer,
said,
digital marketer, digital marketer speaking. Yes, re-engagement loop. Yes,
it's really keeping them within that same environment, because that will drive, call it ads if you will, call it whatever you want to call it. But if you can show that a user is spending 5x more time on your platform, that's a great value prop for anybody putting ads in there. Like multiple other companies out there, right? So I think that's a good thing, and I really do think it's a little bit of a pivot here, Thomas. I agree that it's a complement, but it will, I think, to a certain extent, eat into your original, or the original reason Twitter got started, right? And hence I called it a pivot, because a complement, I think, is effectively, there's no overlap, there's no eating into each other's segments. So I do think it's a pivot. To what extent, I don't know. Or I don't think none of any of us do, but I think it's something to look forward to and see how the engagement grows.
Yeah, definitely. But I also want to point out that it does not mean that Twitter is a fantastic company or it has a bright future. I mean, this is the early glimpse. We have not even seen. We're not even sure that if this is a pivot. We're not even sure that this is their next big growth strategy. And Twitter is not exactly a cheap company by valuation, so that's something that people need to be aware of. And yes, they are embroiled in all sorts of other stuff, with like legal problems, the whole like sex content on Twitter and all those kind of things, right? So they're embroiled in all of that, and something that I think we all should be aware of, right? Will that dilute the audience? And also I think as an investor, we got to keep observing to see their numbers, to see their interaction, to kind of see if they can continue to grow their MAU, they can show some numbers in terms of subscription numbers to say that it's growing, or what are we seeing, right? So I definitely want to see some exciting new things coming out of Twitter, right? The sleeping bird for a very, very long time. So yes.
Yeah, nice. All right, Thomas, let's jump on to the next piece of news here. What are we
I
starting
want
with?
to talk about Google. They're actually working on a new kind of search model. I won't say search engine, but it's addition to what they already have. Basically, it's something that gives even more context to your search results, right? So now, in comparison, right, you search something on Google, it's just going to give you back some ads on the top and then the listing results, right? And based off your search history or what have you been typing here and there, and then it's trying to get you even more recommendations, or your ads become more refined. The next level is where the search results are going to recommend you whether the items that you bought previously is going to be good enough for, let's say, your search query. So example, you want to go hiking on some mountain, right? Google knows that you actually bought some hiking boots before, right? Maybe like 3 years ago. It's also going to recommend you, not an ad, but a search result of whether the hiking boot is actually good enough for the hike that you want to make. So there's going to be additional results that's going to appear, right? That's very, very contextualized, right? According to your own history throughout the whole of Google. So that's just for hiking. Like if you go and search for, let's say, Korea, like, do you know that you have to prepare this and prepare that? It's going to work something like a virtual assistant, where it's going to recommend things that you would normally consider maybe like the second level or the third level after you have your first question answered. So they'll rather present all these up front and then, oh yeah, all my search results are actually there already. I don't have to ask more questions. I've got everything that I need. Yeah. So I don't know. There's some implications this. Maybe the user experience changes and all that. But I do see there's some opportunity for advertising. There's also opportunity to really make the search a lot more seamless. And you just end up using more of Google. Yeah. What do you guys think?
Wait, I one question. Do you guys give Google all your information? Google actively try to collect, right? Do you block it? Do you say no?
I read the whole privacy policy, and then I just click yes, but no.
So you just give it to them, right? Yeah.
Yeah lah,
Okay.
yeah
So
lah.
that's no that's the thing, right? Nobody reads privacy policy anyway. But yes, that's the thing. Even like most of my friends just give Google all their data, and I remember one of my friends very vividly tell me that, hey, Google makes my life simpler, right? It gives me more efficiency, and the more information that I can feed it, the more accurate stuff that it gives back to me, right?
Hmm.
So I do think that if people become more cognizant of how to use this thing, it may really elevate that consumer experience. With Google having some of its IoT push, and also this whole process of potentially giving you more information, and it's all on the bedrock of more information, knowing more about you, right? So if you use IoT, if you log in everything through Google, use your Gmail for everything, you use like Chrome, you're on the maps and everything. Essentially, with all this information, they can predict what you want, right? So actually, it may be an elevation to consumer experience, right? Google may be pushing it to the whole level, and that will be interesting not for Google, but I think it'll be interesting for Facebook, because Facebook is getting challenged um, from Apple. Apple's not giving it a good time, and with all this privacy, rules and all that jazz, it feels like Facebook's data collection may eventually be less accurate than Google if Google can push down this path. Giving providing more and more of these kind of predicting data, like where they can predict what you want to do and all that, is the next tier of thought, right? Eventually, yeah, it may make advertising on Facebook less accurate. I don't know. What are your thoughts?
Well, I think
Because the
they're
model is
twofold, right?
advertisement, right? Model is
It
advertisement. I think
is.
we got to
It
be
is.
aware of this. Yes.
It's twofold, right? I think one is okay. I mean, we can talk about the data side of things and privacy and all of that later, right? But the other one is, does it add value? And I really think that's what Google is trying to do here, right? And if you think about it, if you're googling hiking boots, more often than not, you're going to find out how it's been, or what is the review of these hiking boots, right? At least for myself, if I buy anything, the first thing I want to know is, will it fit me? If I'm paying $1 for this, is it worth it, or is it going to break after the first hike, and then I
Question:
buy another one?
Do you guys watch YouTube videos for reviews?
Yes.
Right, that's my go-to these days. I stopped reading blogs and others. I just go to YouTube and type whatever I want to buy, put a model down there and review. And then it comes out 10, 20 review videos you just watch. It's like, oh, okay, man, not too bad. Although I know it's like
Yeah.
sponsored, some of them probably sponsored, but it's like, okay, let's just
Yes,
buy.
it is.
Right. So yeah, it's interesting.
The thing about the YouTube though, and I still read, right, in all fairness, for reviews, is because I skim through it a lot faster. With the YouTube video, you don't know where to stop to find out the actual part of the information that you need, because you don't really need the full review. And I assume that this is what Google is looking at as well, right? That little bit of review for what you want to use it for. And I think that's great, right? Or of course, barring privacy policy and barring all of the other stuff that effectively we're just giving Google, including our home address and anything else. But I think there'll be a lot of work to be done. It's not going to be accurate when it first starts, but I think it will develop in the form of that. I think it's a good idea. I don't know about the execution. I guess in summary, that's what I think.
No, but I think you don't need to be worried about execution. I mean, it's Google. All right, to be exact, I think it's quite hard for them to mess up execution. They have done a lot of iterations and they built a lot of things to this point, right? So search is their baby. I think it's very hard for them to mess up execution. But I think more interestingly, as retail investors, as people that are exploring, investing in different companies, will this push Google to the next tier in terms of ad dollars, or is it going to open up a whole new business model? I think that's the interesting part. And for me, I think ad dollar is what okay. Ad dollar is one of those things that is always a fraction of the company's revenue. Right? It's always a fraction of the overall company's revenue. I mean, barring all the small little startups, they're just throwing every single investor dollar back into YouTube, Google, Facebook, Instagram, whatever you, right? So, for most of the sizable companies, it's always a fraction of their total revenue, total, sales that's coming into the company. And if you think about it, total revenue, if the growth is at 5%, so total addressable market, if it's at if the total revenue grows at 5%, I would expect that total advertising dollar also goes up at 5%. Right? So that's very simplistic assumption, but total addressable market has a slow growth in that sense. Right? Nobody's gonna start like pumping at dollars and all that. And I do think that it's reached a point where online offline marketing is getting pretty balanced at some level because it's all about CPM. If I can put enough money in offline marketing, it can give me the kind of the same efficiency as online marketing, then it's okay to do the offline marketing. Right. So I think we're getting to a place, at least amongst my advertiser friends, people are getting to a place where they can kind of balance out a price for online, a price for offline, and they're kind of working with it. It's no longer this idea of like, oh, everything is online and we're just going to drop offline marketing altogether. Right. So with that in mind, I do hope that some of these giants, whether is it Facebook or Google, okay, two of these giants specifically, can look into other business models and don't just do like advertising, right? Advertising is great, big float, full cash, good money, all right? But is there other models that we can explore? Are there other things that we can go into? I think that's the hopes that I have as an investor. Yeah.
Got it. Fair point. All right, guys. I think we just to keep it in time. Let's move on to the next piece of news. I think we have 3 more to go as well.
Yeah, by the way, for anyone listening, if you have any questions, just drop it in comment section. We can always pull it out.
Yes.
Yeah. So cool.
Awesome. All right. So now on to a little bit of a juicy news, right? It's about Spotify. So Spotify, as far as we realized in the last week, is looking to buy back its stocks in the amount of up to $1 billion. And honestly, that is quite shocking to me. Whether it actually happens, according to them, they have approved the amount of up to $1 billion. So we don't know how much they're actually going to spend. But given the fact that they're looking to expand into certain areas, for example, the podcasting space this year, and they said, they're heavily going to be looking at that and investing into this area and growing their market that way, would buying the company or buying back some shares really be the best use of their liquid cash? I guess that's a question that I have. Thomas, why don't we start with you? What are your thoughts on that one?
I don't think so. I personally think Spotify is overvalued. And if you have an overvalued company, what you should be doing is that you use the shares to sell, and then you can raise the cash, right? Most startups or those in the early stages, that's not in the very late stages or mature companies with an established business model, they're making money and all that already. They will actually raise money through equity, and not debt also. So equity meaning whatever the price of the shares, they just sell it, or maybe they acquire other companies through mostly share-based purchases. Yeah. They want to reserve their cash as much as possible. If you look at stock repurchases as a form of investment, they are trying to invest in themselves, right? But if you look at the whole opportunity set, they could have invested in other things, right? I mean, there's other startups you can buy, there's other technologies that you can buy as well. Why do you spend it on your own stock? So this is a question mark, like why now? Yeah, you should, if you follow let's say Berkshire Hathaway or maybe like Coca-Cola or something, they regularly do their share buybacks, but at a price which they deem as fair, right? So they value their own company. They see that in the stock market, this is trading at below my value of how I viewed my own company. I'll buy it back, right? And there exists no other opportunities which I think is better. The other reason I can think of the buybacks is basically they're trying to reward their own management. Yeah, because if you do the share buybacks, right, that's going to keep at least some kind of level steady, or increase it to a level which the management is being compensated. Because more often than not, in management, they will have the compensation programs structured towards raising the share price. Or sometimes it's the earnings of the company, but that's a bit difficult because there's a lot of milestones to hit. So some boards just boil it down to the stock price and the performance. So if you look at it, your money, if you have invested into Spotify, is being used to compensate management. So that's why I actually disagree with this move.
Yeah, I would actually rate this a C move. Okay, I do grade the management. Like I do grade all the management that I invest in, and I don't like this because I think people, when they're looking at Spotify as a company, I would not say Spotify is like a growth company. Like it's not a startup. but it's definitely in the stage of land grab. Right, so it's in a situation where it is trying to grab the following, it's trying to get people to come on, it's reducing its prices, it's increasing its whole content repertoire, it's moving away from only music, because music is giving them a lot of problem with all the kind of royalties and all that, because it's an age old business model, like it's an old space, right? So they're doing all these things to land grab, to get people to come on to subscribe to them and all of them. So they are in a phase where they need a lot of money. They are in a phase where they are fighting up against the guys with huge war chests like Netflix, like Hulu, even Disney Plus, and well, not even Disney Plus, and even like HBO. Okay, not even HBO. Okay, like all of them are very wealthy. All of them have very, very big war chests. And Spotify is probably one of the smaller people that have gotten a very good footing in the audio space for streaming, but is struggling to monetize and create a flywheel and war chest effect, right? And at this moment in time, to buy back stock is weird. To me, it's just like, why, right? The only reason, I think, like what Thomas pointed out, really is for EPS, like all the per share data to come down, for management to get priced in on their incentive structures and all of that, right? To shift stock price up. But yeah, there's no other real reason. And I have dropped a link on the comment section. That one, yes, I dropped that link. So this one guy, I think he is the professor, is a dean of valuation in, I think, New York University, or one of the big universities, and his name is Ashwaf. He has a great idea. I mean, okay, I don't know if I can say he has a great idea of valuation, like he's the dean, okay, but yes, he has a great video to share with you the different phases of a business, and at different phases how the businesses should act, and I think that exactly based on that idea, Thomas even put out the example, right? Coke, Berkshire, those guys are matured business. So they are very mature. There's some sort of fair valuation they can calculate. They are not high growth. So whenever the share price come down, they buy back, because it's, everything can be very accurately calculated based on that idea. And yeah, I think that's a fair way to go about managing a matured business with share buyback and all of them. But for a company that is does not even have their flywheel and their war chest sorted out, I am very disappointed. And yeah, it's definitely not a company that, yeah, definitely have to review the management. The management is quite a hippie guy anyway. So yes. So yeah, let's see.
Yeah, so I mean, I think that's fair, right? They could be thinking about giving stocks to management and without diluting it even more, given the fact that maybe they think that Spotify right now is over diluted, which I don't think so. Especially if you're looking to expand into new areas, you want to dilute it more and get more money from the public, and then publicly trade all of that, and then obviously worry about share buyback when you're at a later stage. I think another company that did a share buyback is Apple, right? I think they did one last year, or not entirely sure. I think 2
No, but
years
it's
ago.
but it's Apple.
But it's Apple, exactly.
But it's Apple,
right? So
right? They have so much money sitting around, they don't know what to do. Okay, I do think they don't know what to do. Okay, I do think they don't know what to do.
So,
they are really doing whatever they can, right? But
for example, no, I agree, right? And again, it's a mature company, right? It's Apple, yes, it's tech, but it's been around for a very, very long time. And I believe that they bought the share buyback because they honestly think that they could make more money investing in themselves than anywhere else. In Spotify, I think, as Thomas mentioned, he thinks it is overvalued. But does the management think that, given the fact that I think, to use Reggie's words, a bit of a hippie? As a quick summary thought, do you think that that the management thinks that Spotify right now is undervalued?
Okay, I let me clarify. The CEO is a hippie. Why I say he's a hippie? Because he's like that serial startup founder, like the guy that tried a few startups, exited a few startups, and did great for himself, and just finding the next big thing to tackle. But Spotify has by far been his biggest. Okay, so at this level of managing a company at this size, you have to care about investor. You have to care about how the investors look, how the market works. You have to care about a much higher order of financial understanding, how to engineer some of these companies, where to allocate resources. And it's not so much about, let's try the next feature or let's do the next thing anymore. It's at a different level. So he is in a new phase of his business career, which is amazing because not many people get to this phase. I salute him for it. But this move, makes me question his abilities, right? Let me just bring a parallel, right? Michael Burry, right? Everybody knows Michael Burry. He's a guy that essentially was it Wolf of Wall Street? Wolf of Wall Street, right? Or was it? Oh, The
Michael
Big
Burry,
Shot.
Big
The Big
Shot.
Shot.
Big Shot.
The Big Shot, right? So he's the guy that shot the housing market and made a lot of money and whatever. But okay, probably he's not the biggest. Like he's just probably the craziest one. The story is the most drastic. So he became featured, right? He became famous, and he told Musk that you should sell more shares at today's price, right? So he told Elon Musk to sell more of Tesla shares to dilute itself at today's valuation, and all of that. And I agree with him, because I think he vividly recognized that Tesla at that point in time was really just at the early, fighting stage, the growth stage, the kind of land grabbing stage, which is exactly where Spotify is, right? And I would even say that Spotify is it's a wonkier situation because the competition is very serious. Tesla at that point in time, the competition was like, can do it now. They're still on the sidelines. They're not that serious yet, right? But Spotify is in a, I don't like it lah. It's a bad situation. Yes.
I think got to look at in terms of incentives also. The management won't ever think that the company that they have, say like 2% or even 5% shares in, right, is undervalued. Right? They always say that it's actually good for the company, whichever their decision. They are incentivized by saying whatever it is that will raise their share price as high as possible, because that's how most of their compensation actually comes about. So like on average in the US, I think it's about 60% or 67% of their overall total comp actually comes from stock. Yeah. And out of that, it's a lot in stock options, and they don't actually, you can't exercise them unless they reach a certain strike price. So you need the price to actually go up to that level before they can actually do this. So I think there's a couple of reports circulating about Spotify's move to actually buy it. Have they run out of options? Because $1 billion in cash being used to spend on your own stock, they could have just bought another podcaster, right? Or some other content firm, which probably Apple is doing. Yeah. So why?
How much did they pay Joe Rogan again? Wait, let me search.
I mean, think about how marketing dollars you can do with that, right? 1 billion.
Dude, they paid 100 million for Joe Rogan.
Right.
Dude, man. So, you can buy 10 Joe Rogans, right? And you corner off the whole podcasting market, right? You can buy us. We're happy to, be rung up by you guys. So don't buy us, you can invest in us first. But yeah, my goodness. Crazy. And yeah, I just want to really encourage you guys to check out the video that I've already dropped in the link. I drop a link in the comment section. After this, please check it out. It talks about the different phases of a business, right? So growth phase, they should sell more equity, they should push for more, get more money, and then dilute everybody and just kind of keep growing and get the land and all of that, right? And then they reach a point where they are kind of mature, then they have to decide how to push to the next level and manage their finances and be more capital rather than product. And then the third phase, which is essentially a dying company, those companies are at the situation where they're kind of gliding by. So if they're gliding by, then it's really about compensation of investors and all of that. So different companies are at a different stage and they should act differently, right? So you don't want to have the old uncle act like the hippie, right? Then you be like, this is a weird old uncle. So Spotify is at a situation where, yeah, I think that it's a weird move. I don't know why they're doing it. Okay, my turn. Cool. Yeah,
let's
so
continue.
In my continued effort to bring interesting companies into the foray of discussion. Anyway, a flight just went past, so I'm gonna let the Air Force do its job and fly by. Okay, so yes, in my continued effort to try to find interesting companies for all of us to learn and discuss and banter, I have opened a small position in this company a while ago, right? It's called Camping World, right? So Camping World Holdings. I know you guys you're gonna disturb me, but it's okay anyway. Yeah, so Camping World Holdings, it's a company that essentially sells those kind of like caravan kind of thing, right? And it's in a space where it's very fragmented. So they sell camping goods, they sell the caravan services, they sell all those kind of, essentially moving houses, right? That's how the CEO says, that's how it works. And they were in a space where it is very separated. So just think about how there are multiple mini marts all around and there's no NTUC at that point in time when they first started, right? So there were just a lot of mini marts and they were just doing their own thing and everything. It's not centralized. So this guy Marcus, he came in, and I think it's Marcus, the CEO. So he came in, and he's quite a veteran in this space. So he has definitely pulled together his resources and his understanding, and he went on this one mission to consolidate the whole market. So he went on this idea of building an NTUC for camping equipment, lah, essentially, and also like his caravan business and all of that. So they have insurance, they have insurance for the caravans, they have the whole tolling infrastructure, they have everything. So they're trying to build this whole way of life around outdoor adventure and all that jazz. And recently they have reported record revenue of $2 billion, right? So I think that is pretty cool, and a record income of $250 million, which is a 50% growth from last year, right? And they are only at a 3 point something or $4 billion market cap. So it's a very small company. And hey, at such a small market cap, they can drive such a revenue. I think they're doing a very good job for a lot of this retail, distribution kind of business. Yeah. Any thoughts, guys?
Yeah, when you going to show us your
Yeah.
caravan in Georgia?
Yeah. So yeah. So you want me to buy a caravan in Georgia? Okay. I know, guys. By the way, for all of you listening, if you don't yet know, I'm planning to go to Georgia for a few months. Yes, I'm getting a little bored of Singapore, and I need novelty. I need ideas. I need to breathe. I need to know people, right? And I just need to get out, right? So I will be flying to Georgia, and the guys here will continue to take over a lot of stuff. I can still come in live, right? I mean, I can come in live from Georgia, so great, and all that jazz. So yeah, that's the plan. So, but I want to put it out there that it's not because I'm going to Georgia. That's why I went to research on this company. This company has been in my portfolio for 2 years so far. Right. So it's been a while. It's been around for a while. A good friend of mine shared with me, and I was like, oh, that's pretty cool, pretty cute. I don't mind opening a small position in it, but it's definitely a small position. I'm not like some GameStop, multi-millionaire at this point in time. But yeah, it's doing good. Like even Chang pointed out, right? 5% yield, dividend yield, right? So they're doing interesting compensation structure also, which we can talk about it in our geek out if we decide to geek out this company. But yeah, what are your thoughts on a company like that going around and building a whole? I think two things, right? One thing is a company that's going around and consolidating a very segregated ecosystem, and a company that is building on this future of like people living outdoors. I think they're riding on this whole like work from anywhere kind of way of life, right? Where you can you can go camping, you can do all these things, right? So I think these are the two main things that I really want to hear from your thoughts, right? How would you evaluate company that's doing some of these things?
Well, firstly, I think I was just googling it as well, and they just mentioned that they're going to double its dividend as well to the stockholders of Camping World, right? So I thought that was interesting to note. I think it's a bit more than just that, right? And I think maybe that's where you're looking at. Maybe no, you held this for 2 years, so actually you held this pre-COVID. Am I right, Reggie?
Pre-COVID, yeah. It's not because I started camping. That's why.
Okay.
So the first narrative was the one that I was subscribing to: a scattered market, having somebody to consolidate. Right. So just think of all the mama shops, and then someone's building NTUC and it's building like faster and faster and faster from the east side become west, and everywhere start to have NTUC. So that was their move. And they did go through a few cycles of problems because they were raising a lot of debt. They had some bad buys. They merged with some people, and then they had to shed their gun business and all of that. So they went through that whole cycle, which is not easy, right? It's a whole early growth changes and all of that, right? So that was my original thesis when I bought into them, right? Which is why I didn't open a very big position. There was not super high, like what do you call that? Like I wasn't super into it yet, like not very high commitment, but I thought it was like okay, not conviction, not commitment, not very high conviction at that point in time. But it was decently good enough for me to explore the company. But yeah, now there's the whole like camping and live around, all that jazz.
So I think firstly on your first point of scattering and then consolidating, I think it's a great idea, right? I think it's a model that has been working even in other areas, in other industries. So I do think that his vision of sort of consolidating the market so that he earns a cent out of every dollar that is spent in the industry, for example, is something great. Again, this is a bit of an offline play and this and that. But I think something else to look at if you guys are looking at this stock, and for those listening, or please do your due diligence, etc., is do we see this as the new normal, right? And we always talk about this new normal. We have Reggie joining in live from Georgia at one point in time, probably in Camping World Caravan.
Yes, thank you, guys.
Again, if his caravan has internet lah, so I mean,
Hey, hello. I'm already imagining it. I'm there already. I'm at Tbilisi doing it. I was like, hi, yes.
Right. So that's one of the ways. I mean, I know more and more people are buying places outside of the city, so they don't have to go to work every day. Some people just want to go traveling and work while doing that, given what has happened in the last couple of years. So is this what we consider the new normal? Is this what people want to go and try? I guess it's for us to know, but it's definitely something that, for example, my wife and I are thinking about, right?
See?
It's and it's not even
normal.
just because you put this. It's you know what, I need to enjoy. I realize I can do my work at anywhere. If I need to get up at 2 a.m., I'll get up at 2 a.m. and do my work. But then I have the remaining part of the day to explore, and I don't need to travel anywhere because guess what? I'm already there. So I think it is something that personally I am. Now, am I representative of the world? Probably not. But ask yourselves, right? Ask your friends, and so on and so forth. If given the option, would they want to do that? So I do think it's an area to explore and really look at in terms of the way I guess people viewing the world.
Yeah, and I want to shout out that there are two companies that went listed this year. That I'm doing a little bit more study following it, and they are barbecue companies, right? They sell grills, right? So like barbecue grills, guys. So one
Caravan
is Weber.
and barbecue.
Yeah. Like essentially they sell like the hardware and all of that, right? So one is Weber, a very established old brand. You know, if you are serious barbecue enthusiast, you will know them. And then there's this other company called Traeger. Right, so Traeger is the newer guy that is also selling barbecue equipment, and I'm looking at the numbers. I'm trying to see if the post-pandemic situation will continue to ride and can they increase their margins and what have you. But yeah, recently I've been looking at a lot of this like new normal play, right? Not this new normal. What is the new normal? How do I envision the new normal? And yeah, definitely I'm a big believer of this. Yeah, Thomas, any thoughts?
Yeah, so I was looking at some of the financials, just very briefly. Revenue breakdown of Camping World is in services and plans. They actually do some insurance on the caravans that they sell.
Service a caravan and insurance. Yes.
It's a small portion, but majority of the revenue comes from new vehicles as well as used vehicles. So and then lastly is a product services and I guess like all the other stuff, like all the accessories that comes with a caravan. But if they are dealing mostly with vehicles, wouldn't you consider them something like I wouldn't say automotive company, but they're basically they're car dealer, caravan dealer.
So the thing about I think the interesting part of a caravan is it's kind of like a moving home. It's not so it's a little bit of an intersection between a real estate and automobile, right? So I would not consider it a transport kind of thing. Okay, I will classify cars and trains and planes in the same level of transportation, or like at least it's transporting people around. But caravan is one of those things that you could live on, and it's a moving real estate essentially, right? So that's there are caravan parks and all of that, right? So it's very interesting. Okay, don't be surprised, guys, if I end up living in some like Australian caravan park for a year or something. I will find good internet and tune in with you guys. Yes.
Can totally picture that though.
Yeah.
No, what I like to see, what I like to see is other than just selling the vehicles, right? What's their other expansion plans, their roadmap for their product, or even services? So I can like kind of envision if people are into this, can they don't want to buy a caravan outright, can they at least rent one from the company, or can they even do some kind of Airbnb experience with a caravan? Yeah, that would be pretty cool. Why is because right now the current business model is a bit asset heavy. So there's a bit of capex every time they sell one, although it's like a caravan. They're making pretty good margins.
Yes.
But still, long term, right? How many people are going to buy caravans? Let's say in the whole United States, like everyone's going to ride a caravan. I
know, guys. I know. Relax. Right? It's like if you buy a golf golf company. Like, is everybody gonna play golf, right? No, so you gotta size the total addressable market accurately, right? You don't want to benchmark everything to like a Costco or into a Walmart, right? So I think the interesting part about these guys is they are also building the whole asset light layer on top, which is the whole servicing, membership, insurance, all those high margin business on top of it, right? So you have to be a member to get all these things, and then they also have the servicing stock and all of that, right? So I think it's a I cannot even call them like a distributor play, that or they're not even like a one automobile like distributor or servicer kind of thing. They are essentially building a whole infrastructure for caravans, right? And one of the listeners actually asked a question. Am I putting it out? Is the company selling caravan or renting very seasonal, since traveling is somewhat affected by seasons?
She's mostly selling. Yeah.
Yes, they are mostly selling, but they also have the whole trade in and out kind of thing. And we can always talk about it in a geek out if sufficient people are interested. If you're interested, come to our Telegram group and tell us you want us to do a geek out. Yeah, and then we can do that another time. So yeah, good stuff. By the way, I'm learning about barbecue company. I will get back to you guys on the barbecue grill business.
I think one other note on this, Thomas, is that it's a small pivot for them to move from asset heavy to a rental base, right? Which is also asset heavy, to be honest. So I think that if they do want to move into a a market in which they do want to do rental, it is definitely possible, given that they've already set up all the infrastructure. So it is something possible, but at what point? I'm just reading here as well that I think it was 2 weeks ago that they announced a share buyback. Company stock repurchase program for this company as well.
Why? Yes, they do that pretty often. They are actually, I would say that in their space, they are considered quite mature already.
Yeah.
They have consolidated a lot of, essentially the whole of the US now has this thing called Camping World, right? Before that, it was just like mom and pop all around. So they have definitely gotten to a stage where it is a little bit closer to CVS. So it's like they are decent size, they are a little bit bigger, and they're building ecosystems and all of that. They're not small anymore. They're not like when they first started, and for share buyback and all of them, I think I kind of get it. Maybe they do think that they are undervalued, or they do have some cash going around. But I think they are, if you want to just look at share buyback, that's one thing, but you also look at their debt, right? So how they managed investors overall, I think they're doing a pretty good job. And I would say that they are really it's some sort of a flywheel effect going. So I think it's okay, if you ask me. Yeah, not all share buybacks are bad, but yeah, Spotify is
Also, just to note, it's not $1 billion that they're buying back, right? I think it's 100
million.
Making
money.
They're making money.
They are. They actually mentioned in this that they have good, strong cash flow. In this news article as well, which also explains why they do want to do a share buyback, pay less dividends as well, right, for them.
Yeah, exactly, guys. Okay, let's move on. If not, it becomes a Camping World Geek Out, guys. All right, we gotta be clear which show segment we are on. Okay, we'll do a Geek Out another time.
All right. Last one, Thomas.
Yeah, so I want to bring up NVIDIA. Basically, they outright said that their ARM acquisition is going to be delayed by at least more than 18 months. So, well, that poses some challenges because this one is not coming from Qualcomm, who was initially the ones that were just complaining everything about it. But now it's coming from the UK government, right? So they're finding that some anti-monopolistic issues with this deal. It's going to threaten Qualcomm, Intel, a lot of other companies in between also, because it could, NVIDIA could actually block out the entire CPU architecture if they go and do this. Yeah. So
although I don't think they will, but it's a possibility, yes.
They actually have a dedicated website for the NVIDIA ARM acquisition. So they're listing like all the benefits to like Europe, to China, to US, to try and see like, they should proceed and all that. Hopefully it does. If not, NVIDIA doesn't really have a big phase 2 of their growth. Yeah. What do you guys think?
Can I just confirm? ARM is owned by SoftBank.
SoftBank.
Who is it
at this point in time? But it's a UK company.
It's owned by. Yes. But it's effectively 100% owned by SoftBank. Is that right?
Wait, is that
not 100%? Sure about 100%?
I don't think.
Sure.
I don't think
okay, but it is a big one, lah. Okay. Interesting. I think it's I mean, okay, so the question here that I think the UK government is trying to say is that there would be sort of breaching some monopolistic laws, right? Would you say, Thomas? Right. And what do we know the percentage of market share expected post merger, by any chance?
No, they're in a very different business. Okay, so Arm is in the infrastructure design business.
Correct.
Right. So they don't build they don't do the
understand.
hardware. Yes, they don't do the hardware.
Yeah. So I think maybe you can explain to me why does the UK think that it will sort of create this sort of monopolistic laws and sort of edge everybody else out?
Because so Arm designs all the blueprint for everybody at this point in time, right? So for almost
then they
everyone,
would stop.
Yeah,
So
essentially
then they would stop making it for everybody else except for NVIDIA.
Was it Qualcomm, Broadcom, AMD, NVIDIA, Intel, even Apple M1 chip? They all use some form of ARM's blueprint, right? So ARM designs all of that, then everyone else kind of builds according. I know this is a little bit complicated in the whole semi-con space, but essentially everyone is kind of using ARM's head, like his idea. Like, this is how it works, okay? And then everybody licenses that part. So if you think about how NVIDIA then acquires ARM into part of its repertoire, then what is the threat that NVIDIA can just say, okay, nobody can license this anymore, go and design your own shit, right? And so I totally get this part about anti-monopolistic and all that jazz. And we talked about it in our Geek Out, and NVIDIA Geek Out is out already, so you must check it out. Yes, shameless plug, yes.
Yeah, but I mean, do you think they will? I don't think they will.
Okay, I don't think it's about whether I think they will, but it's more about will this impede NVIDIA's next room for growth? Right, because NVIDIA's primary business is in the GPU space, right? So GPU space, they dominate, right? So they're the biggest, then everyone else cannot really compete. But that is pretty much their main business. And if we're going to see a situation where more and more people are moving into mobile first, or more and more, I mean, all your game guys are moving mobile first. Most of your apps are mobile only. It's like, which app builds a web page these days, right? So maybe to funnel you to the app, right? So mobile only, everything is mobile. People are going for wearables and smaller kind of tech arrangement. These equipments, they do not use GPUs. Correct me if I'm wrong, but they do not use GPUs. So that becomes a challenge for NVIDIA's future in terms of where it's heading. Of course, there's a whole data mining, the whole crypto mining kind of thing. There's the whole what is that? Data center kind of thing, which they are dominant in the space, but even crypto is breaking away. I think a lot of the crypto enthusiasts, they have their own rig these days that they're building and developing that's focused on mining crypto, because GPU is not built for mining crypto specifically, right? So even that part of the business can be kind of fractured out, right? So I think that's what Thomas is trying to question, to see that will this affect the next leg of growth for NVIDIA, which is very fair because NVIDIA at today's price is a $500 billion company. Okay, so it's not a small company by market cap. Can it continue to grow? I am not sure. Yes.
Got it. Fair enough. I think just to clarify as well, GPUs, I just Googled it. GPUs are in smartphones and in, say, Apple Watches as well. There's still
no. There isn't.
There isn't? I'm just Googling, so I'm just found out that they have a GPU here.
So it's okay. So Apple's architecture, they have a very integrated design, so it's embedded inside using the ARM architecture, right? But NVIDIA's GPUs are mostly like graphical cards, like this big stick. Then you just stick it into the motherboard. Yeah,
got it.
Yeah, so the functionality has been put together. Yes, so. Interesting, right? So maybe Apple will be challenging NVIDIA, right? So Apple is fighting NVIDIA's business, right? They will build up their production and then sell the M1 chip, and then it becomes a whole new business infrastructure. You never know. So I think investors of NVIDIA, which are not little, I think quite a lot of people invest in NVIDIA, has to be very aware of all these risk factors of NVIDIA. And the failure of acquiring can be quite a challenge for its next phase of growth. But I also want to see that they are not, because it's like acquiring ARM is one of those let's shoot for the moon kind of thing. Let's shoot for the stars kind of thing, right? Okay, then maybe we can acquire this guy and then we'll have a great life for the next decade or something, right? But if this is happening, this is a situation, it will continue to be very hard. I will not even price in 18 months, of wait time, right? I will hope that they can start to tell me like what is the next plan and what are the other strategies to go forward with. Yeah, I will find it very scary if they tell me, oh, just wait for 18 months and let's just see what happens in 18 months.
How we go.
Yeah, how we go. But don't get me wrong, their core business is doing very well. They're selling out like crazy. Every time their GPU come out, it gets buyed up. It gets shoot up. Everybody will kind of buy it, right? So they are doing very well in their core business. So they can potentially continue to milk it for a very, very long time to come, right? For maybe 5-10 years until the next tech cycle really comes in and all that stuff. But yeah, I think it poses a questionable future for them if they cannot acquire this or they cannot find another new business model.
Awesome. Any last words? Because I think we're at 9 o'clock already. Thomas, any last thing from you?
No. Yeah.
Awesome. All right. Thanks, guys. Thank you so much for spending the time with us on our TFC weekly market updates. All right. Have a good one. See ya.
See ya, guys. Okay, I gotta click.